All right, joining us now to talk more about the markets and your money and everything going on is Mark Avallone. He is president of Potomac Wealth Advisors. And Mark, I know you are not wildly bullish on the stock market overall, but do you see any pockets of undervaluation or good opportunity out there given all that is going on right now?
I think almost all the opportunity is going to come in as a result of a China-U.S. trade deal. I think the overhang is basically affecting every area of the market. The best beneficiary of this trade war, if you want to call it a trade war, we still think it's more of a trade skirmish. The best beneficiary have been interest rate sensitive sectors because of the depressed nature of the impact of these tariffs is going to depress economic activity, could be slightly inflationary, but overall it's going to depress economic activity. You heard that in your open with the global growth story. It's not only going to slow things down here with consumers paying more for goods, but it's impacting global growth around the world. So interest rate sensitive sectors could benefit in an odd way from this global slowdown.
So what do we do now then? Given that backdrop, Mark, what's the smart play?
Well, I don't think people have to change their strategy every day just because the news cycle changes every day. I think you have to build a portfolio that has the premise that we're still in a growth cycle, we're still in a bull market, and a recession. I mean, recessions are being pushed out now because of the strong U.S. economy into mid-late 2021. No one sees a recession on the horizon. We have low interest rates, and we don't have commodity spikes. So those three factors lead us to believe we're still in a bull market, and patient investors could keep their allocations and ignore the daily fluctuations and the daily tweet risk and stay invested.
Stay invested where?
Well, I think it depends on your risk profile, but certainly U.S. stocks have been a bright spot. And the other thing is that global growth may be slowing. And in that report, I read bits of it this morning, India's GDP was raised. So there are countries that are not in lockstep with the China-U.S. trade war slowing down because Brazil or Venezuela are struggling. There are countries in the emerging markets arena that can sidestep some of this. India is one of them, and their economy is very strong. And the report this morning underscored that.
Okay, so if we look at the global sort of backdrop, and we hear what Jumana said about concerns of global growth and a 10-year yield at 2.41% in this trade skirmish or tussle or fight, whatever it may be, do we look out 6 months and say that'll be over and the strong U.S. economy and pretty good corporate earnings will ultimately win the day?
Yeah, we think there will be a trade deal. There's too much going on for both President Xi and Trump. So we think there will be a trade deal. There may not be a lot of teeth in it, but both leaders need this to tone down. When that happens, the overhang on the market leaves. We think corporate earnings continue their upward climb. They're in a little bit of a malaise right now. It's more company specific. We think by Q4 earnings recover. We have the strong bull market continuing. And once the headlines of the China trade war subside, I think the bull market gets another leg up. And that's our thesis.
All right, Mark, it was a real pleasure to have you on once again. We'll see you soon. Have a great rest of your week.
Okay, good to see you.